Whole life insurance is one of the most polarizing financial products in the world. Why is there such a wide gulf between the people who believe whole life insurance is always a scam compared to the people like many of our clients who love their whole life policies? In this episode, I will dive into the 5 main reasons that people use to decide against using whole life insurance and compare that to the 5 main reasons that people decide to add whole life to their financial plan. I'm Nate. I make sense out of money. This is Dollars and Nonsense. If you follow the herd, you will be slaughtered. All right, everybody, welcome back to the show. It's so fun to have you here again. I'm going to talk about a fun topic, whole life insurance. And if you've been here for a long time, you know that that's what we talk about quite often because we practice this thing called infinite banking, which uses whole life insurance in a unique way that the world really at large doesn't understand completely. But with this being said, anytime you get involved in something like whole life insurance, there is so much polarization occurring here. There's so many people who love being their whole life policies. I would be one of those. I know I'm an agent. I know that I make money from this. I know I've drank the Kool-Aid. People would say I'm biased. I'm just merely saying I love whole life insurance policies for the purpose that they're fitting in my life. But then you go, and if you're trying to figure this whole thing out, you're looking for infinite banking, you're looking for whole life insurance, and you're seeing that there's this big gulf between the people maybe like Dave Ramsey and people in that camp, maybe in that side of the camp, who would be like whole life insurance is literally the worst thing in the world. I think he calls it the payday loans of the middle class type of the payday lender of the middle class is like whole life insurance compared to these to other people who own huge policies, pay big premiums, and love every second of it. And there has to be some sort of, there has to be a reason for this. There has to be a reason. And essentially what I guess my purpose in this episode, if you're listening to this, is maybe to bridge the gulf. Like if you're listening to this and you're one of those people who historically has said whole life insurance is horrible and run away from it, it's a total scam. I think you can be right at a lot of your accusations against it, but I would ask that maybe we bridge the gap a little bit to maybe help you see that there are actual real reasons that people do want to be involved in it. And so what I'm going to try to present here is like the 5 main reasons that people would steer clear from whole life, and they call it a scam, and what they would claim if you read articles about why to avoid whole life. But then I also want to do here's the 5 reasons that people do decide to do it. And so that we can kind of bridge the gap and we can both be right kind of at the same time. It could be a bad idea for some people while being a good idea for other people. That's just the way things work with finances. And there's very rarely just a total, a thing that never makes sense for anybody in any scenario. That would be a unique thing. That would be a horrible thing. And it'll probably get booted out of the market. So there's got to be a reason why some people love whole life and some people hate whole life, and they can both be right, but maybe we can come together and be friends. That's gonna be the goal of this. So let's go ahead and I'm gonna start with the 5 reasons people think it's a scam. So let's start there. I'm gonna list them out, these 5, and then I'm going to kind of dive into the details of each one. But so here's the 5 reasons why someone and maybe you're watching this who you would believe whole life is a scam because of these things. And maybe you could bring a whole bunch more. 5's a nice round number. Okay, so maybe there's more on both of these lists, but these would be the top 5. So the first one that they would say is whole life insurance is too expensive. We'll talk about that. Whole life insurance is too expensive. The second reason people bring up is that agents are just in it for the commissions. The commissions are too big, or agents are just commission hounds desperate to earn the next check. So the agents have ulterior motives, which is fine to think. They would say that the rate of return is too low. That's the third one. The rate of return is too low compared to other things you could do with your money. The fourth thing they would say is, why would it ever make sense? To use your own money, you have to pay interest to use it. To take money out of a policy and borrow it out, I got to pay interest to use my own money. That doesn't make any sense. And then the last one is honestly a bit more of a talking point, but people bring this up, is that the insurance company steals your cash value when you die. They take what's rightfully yours and they don't give it to you, and they steal it from you, and you're getting some sort of short end of the stick. Some of these are very valid, by the way. Points against it. Some of them are a bit more what I would call more of a talking point. And I'm not trying to offend anybody when I say that. I'm just merely saying that, there's some answers to it that maybe it's a little off base. But either way, So those are the 5. It's too expensive. Agents are just commission hounds. The rate of return is too low. You have to pay interest to use your own money, and you don't even get to keep the cash value when you die. Let's go ahead and talk about all these. And I'm not going to try to defend whole life. Really, I'm not. I'm truly not going to try to defend it in this. I am maybe going to defend it when I talk about the reasons whole life people, the people who use it, they like it. They would give these 5 reasons, which we'll get to in a second. But for the most part, what I'm saying, I'm trying to bridge the gap here. I'm trying to say that the naysayers, you can actually be right on all of these fronts. Whenever you talk about whole life insurance being too expensive, number one, the idea is, why would I argue against it? Like, it is an expensive thing. Like, there is real, relatively significant expense to get involved in whole life insurance. It's not a cheap thing. It's not like like a bank account is cheap. Most of the time it's free. You know what I mean? Like, you can put money into a bank account and it doesn't cost you anything to do it. And so it's kind of a free thing. Whereas if you put money into like a mutual fund, there might be some sort of fee, but maybe you'll get more for it. Like, instead, the bank account it doesn't grow very well. So I'll go invest in stocks and mutual funds, and there might be some fees involved, but that's okay because I'm trying to get more. And then real estate is actually pretty expensive to get into as well. There's commissions to be paid, title fees to be paid, all sorts of things just to acquire real estate and sell real estate. And so what I'm trying to say is that some things are more expensive than others to get into. That's absolutely true. And I'm not even going to try to argue the point. Yeah, it is kind of expensive to get into whole life insurance. There's certainly some expense. The only thing I would kind of push back on this front, I'm not trying to defend, I'm just merely saying it's expensive depending on oftentimes the time frame you look at and what you want to call as an expensive. I think one of the things that people will describe is that maybe. So in other words, just here, I'm going to give it to him. Yeah, whole life insurance is expensive. I just don't think that's a reason to do something or not to do something. That's like, that there's different models of a Tesla, and you can get an expensive model and a cheaper model. And it's just like, why would you get, like, normally things that are expensive, they're not always just worse than cheap things. Just letting you know. So, but you are right though. It's not a cheap thing. It's just not. And that's okay. It's a kind of an expensive thing. We believe, and we'll get to that on the reasons why we do it. But essentially what we're saying is we believe it's worth the expense and you don't. And that's a perfectly fine thing to discuss. I believe that it's worth it, and someone else can go through the exact same knowledge and say, I don't think it's worth it. And we can both shake hands, be friends, part ways. But so that's the first one. It's too expensive. The second one is agents are just in it for the commission. Agents are just in it for the commission. And, this one is a pretty valid excuse. What I get nervous about, though, is whenever people are saying that, with the reason why I think this might be a bit of a straw man style thing is because now we're not even really totally talking about the value of whole life insurance. We're kind of just talking about ulterior motives. And we're saying that the reason why, that whole life insurance is a scam because people are just in for commissions. It is a sales business. So that there is a truth to that. Just like real estate agents are in it for the real estate commissions, and car salesmen are in it to sell cars. So we have to acknowledge that there is an ulterior motive here. They're exactly correct. With an ulterior motive, that there is going to be biases and there's going to be bad apples anytime things are being sold, where people are just in it for the money, And I'm just saying, though, that is kind of capitalism, by the way. Like, I believe that I can be interested in earning an income for doing something, and that my customers we can live in a world in which we have a fair exchange of value, where each party can leave the table feeling good about what they have, right? And so once again, whole life insurance, this kind of fits in with the whole life insurance is expensive, quote. It's just kind of maybe a bit more targeted at saying whole life insurance agents are scoundrels, in which I would say some of them are. Some of them are. Some of them are just commission hounds who are out here trying to make a quick buck off an unsuspecting audience. I'm just saying, like, don't make that a reason not to do something if it would actually help you, right? Like, hey, there can be, business is all about trying to find win-win scenarios. It's that zero-sum game where if it makes sense for the agent, it doesn't make sense for me. That's actually just not a very business-savvy way to think of life, just letting you know. But I'm not going to defend it. You're right. There's commissions to be paid. We would also kind of just mention that, only 10 or 20% of people who try to get into the life insurance business, or maybe even less than that, actually survive in it for 5 years. It's very, very, very difficult. It's very, very, very difficult. I would also just kind of mention on this front that, technically speaking, the insurance company is the one who agrees to pay commissions to the agents. It's not actually the individual purchasing the policy. It's coming out of the general account of the insurance company. Of course, it's involved in the pricing of whole life insurance policies to begin with, but it's not like It's essentially they're the ones who decide how much agents get paid based on how they want to fund their sales force, and knowing that anytime you're a hunter sales as opposed to internal sales, there's going to be higher commissions. Like, in other words, the total cost of distributing the life insurance policies can be kind of expensive no matter which way you go. So just thought I'd let you know that. So agents are just in for the commissions. There's some truth to this. I'm here. I do like to get paid. I do want to be compensated for what I do. That's exactly right there. And that can create conflicts of interest and ulterior motives. And that's true. That's 100% true. And that can make people nervous, and validly so. I don't like in situations where people can come in with ulterior motives, 100%. So understood. The third point was that the rate of return is too low. They're essentially saying that life insurance, and this is probably the most common one, of course, is just simply saying like, okay, it's too expensive. Agents are just in for the commissions. But if the rate of return was extremely high, like if we're earning 20% rates of return in whole life insurance policies every year, I think people would be like, oh, maybe it's a little expensive to get involved and agents are just in it for the commission, but I'm making a ton of money. And so they would forgive all of this. But this is where the rubber hits the road, the rate of return being too low. And once again, yeah, we would always kind of say compared to what? Essentially, they would say the rate of return is lower for, the growth of a whole life policy compared to like the growth of if I just put money in the stock market or something like that, or real estate or something like that. And I think once again, there is truth to this, that historically speaking, the S&P 500 has earned a higher average rate of return than whole life insurance policies. And we can, and we're going to, I don't want to use this time to defend what I'm trying to say, by the way. So I'm going to do that maybe in the next 5 pieces. But the answer is just yes, the rate of return is lower than there are other things that you can do that would likely earn a higher rate of return than buying a whole life insurance policy, putting money into it, and letting it sit. Now, of course, when you talk about the infinite banking concept, which we're going to end up kind of bringing up here in just a minute, of course, the idea is it's not like we're not, me personally, I don't know about the world at large, but me personally, I'm not trying to make the argument to convince somebody that whole life insurance is going to produce a higher rate of return than any other form of financial asset, investment product, anything like that. That's not actually what we're doing. And I think you'll see that whenever we discuss why do people actually choose to buy it. But the idea is, yes, you are an accurate statement that if you're going to put money into a whole life policy and let it sit there and never touch it and just have it earn a rate of return, that there is likely going to be some sort of other thing that you could do, that you could get involved in that maybe would have more risk, but would have a higher potential for more return. And that's just true. And let's move on. The fourth one is that you have to pay interest to use your own money. Why would I want to pay interest to use my own money? Once again, this one is more of a talking point than anything. You're not actually using your own money. You have your policy as collateral, and you receive a policy loan from the insurance company. It's actually borrowing money from the insurance company with your money as collateral. So this one's more of a talking point, but there's some truth to it. That there's this awkwardness of if I put money into a policy and I want to access it. By the way, you can make withdrawals from policies. By the way, you don't have to take a policy loan against the policy. Which we'll talk about in just a little bit too. But what I'm saying is there is this awkward thing that there's this interest to pay whenever I use my own money. And that is, I would say that it can be a good and bad thing. I agree. Like it can be, there's this awkwardness to it. It's hard to understand why it would ever make sense to do something like that. And there's a lot of education that would get involved into understanding this. That's one of the cruxes of the infinite banking concept, is trying to describe why it can actually work in your favor to do it this way. But we understand that face value, that is a very awkward thing, and it could come back to bite you. Agreed. We're trying to bridge the gap here. Remember, we're trying to bridge the gap, bring everyone into the fold, and shake hands and have some understanding. So agreed. And then lastly, the fifth one on this, the whole life insurance is a scam, is the idea that the insurance company somehow takes advantage of you when you die, like that they steal your cash value, they take your cash value from you when you die. And once again, this is once again kind of a true statement. The idea is whenever you die, you don't get both your cash value and your death benefit. When you die, you just get the death benefit. The reason why, and so there's a truth here to some degree. Like you don't get to keep both the death benefit and the cash value added together. You get just the death benefit at the time that you pass away. But what I don't like about this one, and I'll even push back on this one, is that this is a true talking point. And what I mean is talking point is based on half truths. So just people need. If you're going to be upset at whole life, then be upset for all the reasons that are valid. But don't go say things like this. Like, it's just an awkward, it doesn't even, it's kind of a nonsense. So in other words, your cash value by definition is your equity in the policy. Like the whole, like the cash value is the money the insurance company is building up to one day pay you this big death benefit check. So at any given moment in time, it's not like they have money to give you a death benefit and money to give you your cash value as if they're two separate things. Your cash value is your equity in the policy to one day pay you the death benefit. It's intertwined. I mean, there's not, as I said, there's not like two buckets. It's not like it's like saying that it's kind of the straw man thing where you'll put out there like, hey, if there was a $2 million death benefit and $1 million of cash value, that the insurance company would be able to should be able to pay me $3 million when I die. I'm like, no, the $1 million that they build up the cash value is part of what they're building up to pay you the $2 million death benefit. Like that's the whole point of the cash value, is building equity in this policy. Hey guys, in case you hadn't heard, I created a completely free course on infinite banking that I really believe is the best course available in the IBC world. If you're looking to fully understand how the infinite banking concept really works, then go to livingwealth.com/escapethebank to get free access to the course. Once again, we're offering what I believe is the best course on infinite banking available totally for free. Just go to livingwealth.com/escapethebank to get access. Now, get back to the podcast. And so, once again, this one's kind of a weird talking point. Like, it doesn't make a lot of sense. I guess what people, the valid point is that if you had chosen to buy term insurance and not buy whole life insurance, and then take your money and invest it into something else, then when you die, you get the term insurance death benefit and the investment, and you get both, whereas in whole life you only get one. But what we're saying, the reason why this is a bit of an awkward conversation is, of course that's the case, but we all know that term insurance so rarely ever pays out. If you think you're going to die within the term period, go buy term insurance as well as whole life, and then you get the term insurance death benefit and the whole life death benefit, and you'll be better than if you made the investment. Like, what I'm saying is, yeah, when you buy, anytime people buy with term insurance, it's an awesome investment. It doesn't make sense. It's very difficult to understand the risk calculation there. In other words, if you buy term insurance and die with term insurance, then you are going to have one of the best rates of return of your life, because that's what term insurance does. The chances of you dying is, of course, astronomically small. They know that. That's why it's priced the way it is. So during the term period that you're alive. So what I'm saying is, yeah, there is a truth that if you had bought term insurance and made investments and died within the term period, you get both. But since 99% of term insurance policies don't pay out because you don't die during the term, then your term's going to expire and you're just going to have the investment. So what I'm saying is, once again, this is a bit more of a talking point. Like the actual accusation doesn't really make a lot of sense. And if you want to have both the whole life death benefit and term death benefit and die within the term and have a ton of money sent out to you, that'd be great. It's not either or scenario. So I hope that makes sense. Those are the 5 reasons that whole life insurance is claimed to be a scam. Now we're going to transition to, why do other people like whole life insurance? What are the 5 reasons why people would even get involved in this to begin with? Like, if we have all of these, it's expensive, agents are in for the commissions, there's these ulterior motives, the rate of return isn't as high as potential other investment alternatives and different capital alternatives. I have to pay interest to use my own money, and the insurance company steals my cash value when I die. Why would anyone ever choose to do this? Well, let's just try to bridge the gap here. Let's try to bridge the gap, and maybe we can become friends, and you can choose not to do it, I can choose to do it, and you can maybe understand why I don't, and I can understand why you don't. So the first one that I wanted to say about whole life insurance is that the honest truth is that when you build policies for cash value, the long-term growth is often better than other alternative safe places to store money. So if we're talking about a safe place to store money, whole life insurance really has reigned king and remains to reign king in the world as far as the actual long-term growth, especially if you build the policy to accentuate cash value. There are some duds out there in the marketplace. I mean, there's some crappy whole life policies. There's some crappy agents who build crappy policies and that really don't produce much long-term growth at all. Those exist. There's no doubt. I'm just saying, if you're going to kind of give a best case scenario, you get a good whole life policy designed to accentuate cash value, and you're going to get, oftentimes, over long periods of time, a better growth utilizing this policy than you would with other types of safe places to store money. And especially when you involve the tax advantages of using whole life insurance policies. That as the policies grow with interest and dividends, there's no tax on that growth. There's no tax on the buildup. Compared to, like, if I use high yield savings accounts or bond funds or things like that, where, you know, the majority of these would be taxable the year that the interest is paid, and it's really going to drive down the growth ability of that account. So when you actually look over long periods of time, you'll notice that it is true that it is kind of almost objectively, like it is, at least we can agree that is one of the best places to store capital in a tax-free area, of course, that is safe and that is liquid and stuff and things of that sort, that it really does reign supreme. Now you might say, I'm not a candidate for that type of money. Like I don't need safe money. I'd rather I just don't need it. Like I'd rather go invest in the market that has some volatility, but I don't need any sort of safe place. And we say, okay, that's fine. Maybe it'll work out well, maybe it won't. The future's uncertain, but nonetheless, it's great. Just know that some people like having, choosing to put money into the best long-term safe instrument that they can really find, especially when you involve all the tax advantages of the policy. It really is pretty nice. Like what I'm trying to say is like if a policy grows by 4% over, a 30-year time frame, and you were going to compare that to an account that you had to pay taxes on just to get that net of the 4%, you would have to essentially create a growth of closer to 6% to be able to net your 4% and pay tax, depending on your tax. And then when you include the idea of having the death benefit and some of the other benefits of having whole life, you're like, this is actually you'd be hard pressed to find this over long periods of time. That's all we're saying. It's a very valid, solid instrument for safe storage of capital, and that's better than what we can typically find over long periods of time. Maybe in short instances, maybe short-term treasuries for a period of time might be bigger than the growth of a policy in that moment, like what we may have seen in the past 6 months or so. But what we're saying is over 30 to 40 years, it historically has been and still is, especially when designed for cash value, one of the best places to store safe money. So there's that. That's why some people would choose to do this. The second reason is that there is a benefit to being able to access money contractually at any time under pretty favorable conditions, which is funny that we say this when the other people said that you have to pay interest to use your own money. And so they say that would be stupid. I would never do that. Where you have other people on the whole life side that's like, I like the idea that all of this cash value is usable for me to achieve whatever it is I want to achieve with money. Not whenever I'm 59 and a half, like not after I retire, but like right now, every day, all the time. And you could be the person who says, I don't need that type of access. I'm fine letting it sit. I never plan on touching it. But then you'd have to understand that that would be a benefit to some other folks that may be in different positions than you. So once again, we're trying to bridge the gap. That in policies, you have the contractual right to take a policy loan or to surrender it or to withdraw from it, the cash value. But the most common way to access it is through the policy loan feature that allows you to borrow against the policy up to like the full cash value at any time. It would be a tax-free transaction. And it's the only place in the world that offers you what I call an interest-only line of credit for life. It's the only place in the world that offers this. So in other words, whenever you borrow money from the policy, you can pull out as much as you want. You can repay whenever you want. It's like a line of credit. Like we can pull out whenever we want, however many times we want, just like you would with like a home equity line of credit or something like that, where we pull from it, we repay it. And the only thing that we have to do is pay interest once per year. And then even technically with that, you can let it roll into the loan balance. If you happen to be short on cash in a bank account at that time, you could just use the policy to pay for its own interest if there's cash value available and stuff like that. But what I'm trying to say is it's an interest-only line of credit for life, which means I never have to repay principal unless I choose to, as long as I pay interest each year. And it's for life. There's never an end date to it. This is a unique thing. Is all I'm trying to say. We have to at least give credence to the fact that it's a unique thing in the financial world, and we'll leave it at that. All I'm saying is there's a big group of people, me included, that would like to choose to pour a lot of money into, like point number one, a long-term growth-oriented place that I think is safer and more growth-oriented in the asset class of safeness. And I can use it at any time to achieve other things. This is a big deal. So we'll talk about that even more in just a second. But then the third thing that we'll talk about is that there's kind of a built-in estate and legacy planning involved in whole life insurance. Like everyone would agree in estate planning that there can be a role for whole life insurance policies. Nobody ever dies with a whole life insurance policy and regrets having the whole life insurance policy the day that they die. Like that's not a thing. It's one of the best assets to pass away with and to leave money for the next generation. It always has been, always will be. That's its primary function. the primary function that exists in the marketplace is to pass a death benefit down to the next generation in a very seamless way. So there's kind of a built-in estate and legacy planning to a whole life policy, which sounds really nice to a lot of people. There's a benefit to this. It's simple. It's easy. There's no risk to it. I know that the day that I sign up for the policy, that my family is going to have this money, whether I die during a term period, like with term insurance, or whether I live for a long time, that there's this built-in estate and legacy planning that's guaranteed to end up happening for them. That's a benefit. Let's just at least say it's a benefit. You could say that you don't want to do it, but that's fine. But there's a built-in estate and legacy planning already. That's like a common estate planning thing especially for wealthy people who want to leave money to the next generation. That whole life insurance comes up in those types of conversations all the time, because of the natural benefit to leave an estate through a whole life insurance policy. That was the third one. The fourth one is that, why do people like whole life is that they understand that we can use these policies and use this cash value to fund other investments. I mean, this is the big kicker. This is what infinite banking is all about, is the idea that, yes, I understand that there are other investments that can do better than my policy can do. And I'm just going to, but the reason why that doesn't bother me is because we like to think in a scenario where I can put money into a policy, save it there, store it there, and then borrow against it to go fund these other investments that will produce a potential higher yield. Of course, there'd be more risks to it, but everyone who listens to the show know that I invest money. I just use my policies as the springboard to achieve those things. That's what we're doing. So whenever someone says, like, on one side, whole life insurance doesn't provide a very good rate of return, and that's why I'm not going to do it, I would rather go do something else, we would say, well, we agree. It's not the best rate of return in the universe. There's things that you could do that would likely benefit at a higher rate of return. Why we're doing whole life, in spite of knowing that, is that we also are aware that we can leverage the policies to go achieve those things. And that's where the infinite banking concept comes in and shines. That's the whole discussion, is the idea that, hey, I can have the benefits of this whole life policy, and I can use it to help fund other investments that maybe would produce higher rates of return and take advantage of opportunities because I have all this liquid, safe money in my pocket. So once again, we understand, like, yeah, we can agree with you that saying the rate of return is not as high as some other things may be. We would just say, let's use the policy to help fund those things. That's why someone like me would choose to do it, in essence. And then the fifth one is that it can produce safe, tax-free, passive income later in life. This is a reason why a lot of people would say it's not exactly a scam. It's just a good thing to have. Maybe you have investments in mutual funds. Maybe you have investments in 401ks and IRAs and stock market things. Maybe you have real estate. You have all these buckets of money, and you are thinking to yourself, it would be nice if I had a bucket that's just safe, steady, consistent, tax-free bucket that I can use to kind of produce some passive income that's not dependent on renters and real estate markets and, stock market bubbles. And I just have this kind of this buffer from all of that. And so a lot of people would choose to use whole life insurance to fit that bill, whether or not they're infinite bankers or not. It's just kind of a benefit to have. And there's some peace of mind involved in having this safe place that, yeah, the rate of return might not be as high as if we invested in Bitcoin, whenever it was only $1,000 per coin. There's other things that you can do, but it might be nice to have not all of the money at risk doing whatever it is that you're doing, and maybe have some in this other bucket. And so, given I would like to have that bucket be really big and then leverage from that bucket to go fund other riskier things potentially that might produce higher rates of return. But some people will just use it as a different bucket, and that's fine. So in other words, those are the 5 reasons why people who do like their whole life insurance policies, why they would give to say that they like it. They like the idea that the long-term growth is oftentimes better than the vast majority of other safe places, especially when you involve the growth and the fact that it can be accessed tax-free. The idea that you can access money contractually under favorable conditions is a big deal for people who want that to be as part of their financial plan. There's built-in estate and legacy planning from day one, the day that you buy the policy until the day you die. There's this guaranteed windfall that's going to occur for their family, and that can be nice. It's a benefit to you. You can use the cash value to fund other investments. In other words, we agree that the rate of return might not be the greatest thing of all time, but we can then use the policies to achieve things. Like, I've got plenty of investments that I've used policies to fund that have produced for me a much higher rate of return than the policy would itself. And great, I can have both at the same time. That's the infinite banking concept 101. That may not be you though. You might just be like, well, I'm not going to use my policy to fund investments, so I guess I don't want to do it. And that'd be fine. We can shake hands and be like, you guys are awesome, but don't get mad at us. Don't think that we're stupid and doing something that's ridiculous. We're not. It's just like we like all these things. The fifth one is that it does have the ability to produce safe, tax-free passive income later in life. That many people would like. Maybe they'll have income coming from other places. Maybe, as I said, maybe they'll have 401ks, IRAs, mutual funds, all these things. But it's nice to not have everything coming from there. It's nice to have this other place that's totally non-correlated with any of that, to serve as a buffer in case things don't go well in certain other areas. It's nice to have the most consistent, steady financial tool that's ever been created by mankind. That's whole life insurance policies. It's pretty cool. So I hope this has been helpful. Once again, as I said at the beginning, the goal of this was to kind of bridge this gap here. That people can have valid objections to why they've avoided whole life, why they hate it, and why, because of that, they won't do infinite banking, and that's fine, because all yours can kind of be, there's an accuracy to the vast majority of your accusations, especially, like the idea of it being too expensive, and so all this, yeah, we agree. Then again, we would say on our side of the camp that, yeah, we also have a lot of reasons that we do like it, and maybe you just don't happen to fit the criteria for someone who would like it. And that's perfectly fine, but I just get kind of tired of the polarizing content of, it seems very one-sided too. The polarizing, hey, whole life insurance is bad for everybody, and it would be stupid to own it. That to me, that's too strong a mistake. I would ask that we come together as friends and just say, hey, there's a purpose to it, there's a point to it. You can benefit from it if you want to, especially if you fit the idea that these 5 things are things you to take advantage of in your own personal life, if it's a good fit. So I hope that's been helpful to you guys. It's been so fun to have you on here again. And by the way, if this show means something to you, if you're really enjoying learning these lessons, a like, a comment, a subscribe on the YouTube channel, a review on Apple Podcasts or Spotify, wherever you find this content, means the world to us. It helps the algorithms know that this is good stuff that other people should be listening to. So man, it would mean the world to us to help boost this community in that way. But guys, this has been Dollars and Nonsense. If you follow the herd, you will be slaughtered. And always remember, if you want to learn more about infinite banking, I've got a free course on our website. You can go to livingwealth.com/escapethebank and sign up for our free infinite banking course, which I really believe does an amazing job taking you from A to Z on how infinite banking works and how you can implement it in your own life. So go ahead and take advantage of that at livingwealth.com/escapethebank. We'll see you there.